Dilip Bhat also joining us this afternoon. Dilip, I'm going to get straight to the point. We're seeing a quite substantial sell-off this afternoon, and starting from the top, starting with the financials as we see it. What do you feel is really happening today?
Well, I think the waterfall decline that we are seeing in the markets, I think, of course, it has to do a lot with the budget, as also the international factors which have really played out, and we are seeing even the regional indices are down, and so is also Europe to some extent. So I think some of these factors have weighed very heavily on the markets. But more important, I think the financials, as what you said, have also come off quite a bit. If I'm correct, HDFC Bank has reported a lower credit growth for this quarter as per the latest posting. This is what I understand. As well as the fact that Bajaj Finance too came on record to say that possibly that the credit growth is not all that great. So I think all that really points towards the stress and the weakness in the economy, and that is only getting more and more confirmed. And budget possibly was expected to address this particular issue a little more proactively, and possibly all of us were expecting some kind of corrective steps to be taken. Perhaps they have been found wanting, and I think that is what we are seeing. The disappointment is largely also because of that. Without any doubt, I think the budget is laying a solid framework for a good long-term growth. There is no question about that. I think in that sense, it's a great budget. But the pressing problem right now is how do you tackle the current situation in terms of the economy, the 5.8% GDP growth, which was reported in the fourth quarter of FY19. How do you really address some of these issues and the contagion impact it is having on several sectors, including auto? Well, some of these answers have still not been got, and I think markets are still grappling with this. And with the impending quarterly results, possibly I think one should be ready for some more disappointment in terms of the earnings also. So I think all this is really having a concerted impact on the markets at the moment.
Dilip, just wanted to get in your take. Look at the way some of these large caps are feeling the heat. Bajaj, Finserv, Maruti, IOC, L&T. What's the take on, dipping into these stocks at the current levels? Would that be a prudent strategy?
Well, if you see a few names which you have taken were the only real stocks which had gone up significantly even as the index continued to rise. I think these were the few stocks which really contributed majorly towards the gain of the index rise. A few of them which you named. And I think that's true with a lot of stocks which have fallen today. Particularly Bajaj Finance and Bajaj Finserv, if you see, I think the margin of safety was becoming increasingly narrow. But since there was an excess money which was flowing into the markets, and the investors don't have a commensurate confidence in some other stocks, so by default some of these stocks were being bought and invested in, thinking that they are safer bet vis-a-vis the other stocks. So the margin of safety being low, I think some of these circumstances or some of these events really provide an opportunity for the stocks to correct. So I think that is how I would look at it in some of the stocks. I think as far as some other stocks which you mentioned, say Larsen & Toubro, I think nothing more to read in that except for the fact the markets are down. But Larsen & Toubro still remains one of the stocks which one should really look at, because this infra sector is the only one where we expect continued attention of the government, continued good performances, and hopefully they will be taking care of their working capital situation out over there. So things possibly will be much more easier for them. So in that sense, that's how I interpret Larsen & Toubro. So overall, I think...
Dilip, just wanted to get a sense that, when people start to get bearish on companies like, where they have been very bullish earlier, the likes of Bajaj Finance, maybe a HDFC, maybe a L&T as well, you can put into that corner. You think that it's largely towards the last leg of the sell-off?
Pankaj, my reading of that situation as what I said was people are not getting bearish on Bajaj Finance or anything. The only thing is the margin of safety has come down quite a bit and there's very little room for disappointment. So, you know, when Bajaj Finance comes and says that, okay, we are expecting lower credit growth and they are thinking that the credit offtake is not all that strong and which is also supported by what HDFC says. So I think some of these things really act as a dampener to the stock, at least in the short run. So I don't think one should see it as a last leg or so. I think overall markets possibly can correct by 150 points further on Nifty from here. And then possibly it could also go sideways in terms of consolidation or stagnation, whatever you call that. But otherwise, overall, the fund flow should remain pretty robust at the FI level as well as at the domestic level.
Also, in terms of fund flows, do you believe that, say, a little bit of more correction and India would return to a decent PE multiple versus the rest of the world, considering our growth outlook?
Possibly, you know, by the end of this quarterly results, the 30th June quarterly results, when they are out, possibly the EPS earnings growth will have to be cut down without any doubt. And that's how we have been doing, that's how the entire industry has been doing for the last maybe 4-5 years now, that you start off the year with 18 to 20% EPS growth. And then as one quarter and the second quarter passes, you really bring it down. And possibly this after first quarter, we possibly could see that cut happening at the moment. But yes, on an overall fund flow basis, it's always on a relative basis that one has to see that maybe from India's perspective, as we Indians, we feel that maybe things are not all that great. But on an overall relative basis, even if you are growing at 7%, that is not too bad for anybody, and that to a real GDP growth, which may not come this year, but I think on a long-term basis, 7.25% is reasonably good. So you can expect that the FI and the fund flow should remain reasonably very robust.
Talk about specific stocks then, and it's hard to talk about it on a day when everything's seeing such a substantial sell-off. Dilip, let's talk about auto though, as the other pocket of the market that's really seen a beating with regards to, of course, all the disruption caused by what we're seeing on the EV front, and of course, naturally, the other part of it is the slowdown. Maruti also now again keeping production shut for a 5th month. We've looked at subdued sales figures coming in. Again, we've got them pleading that perhaps some respite be given to dealers, for example, in terms of access to credit. So there's a lot going on right now that the sector has to deal with. What would you advise investors who are looking at auto, who are already in some of these names as well?
So, you know, the markets typically, when they are so very exuberant about the markets or even about a sector or about a company, typically they go from an underpriced level to the overpriced levels. And when from the overpriced level it starts correcting, I think it also does the excess on the reverse side. Possibly, I think too much of pessimism has already been built into the auto sector at the moment. So one can safely say that maybe the real, flattening of instead of a decline, and the flattening of auto sales may happen in next 2 to 3 months, and possibly after that one can take a view. But I think if you are really a 1 year investor or 1.5, 2 year investor, which is what you should be at this particular level, looking at the state of the economy, I think one should buy very selectively some of the auto names, especially the frontline ones when they themselves have come off. I think I would say Maruti. So one can do a SIP in some of these frontline names and gradually buy over next 2 to 3 months.
Dilip, just request you to stay. We told you about our 2 stories from the reporters. Do you believe that upgrades as far as bad loans is concerned, or recovery into cases that are into NCLT, as well as divestments, these are both important factors for the markets, and markets are expecting a lot more divestment to come in, and they are expecting a lot more recoveries to come in for some of these top banks?
Well, I think the recoveries in the banks is being increasingly expected, and there is a lot of expectation which is factored in, built in at the moment in terms of the recoveries. So I think that certainly will. I mean, it's on the watch list of most of the analysts, and we are seeing that every quarter. Quite a few of the banks are really making a very specific and a clear-cut statement on this at the moment. So I think that without any doubt is definitely going to play. And as far as disinvestment is concerned, if you are referring to the...
I'm just going to come